All right, let's get right into it. Today, we're not just going to talk about investing. Nope. We are going to install a completely new protocol for building wealth. It's a system designed to, well, fire you from managing your own money. Why? Because it turns out you might just be the biggest liability in the whole operation. So let's start the installation. So let me just ask you something straight up. When you think about risk to your investments, what's the first thing that comes to mind? Is it inflation? A massive market crash? Some kind of geopolitical craziness? Sure, those are all out there, for sure. But they're not the single greatest threat to your long-term growth. Not even close. The biggest risk is you. Yeah, you. You are the unpredictable variable. You're the little piece of code that panics when the charts turn red and gets all greedy when they go green. You are the glitch in your own wealth-building machine. Okay, so let's dig into this. What is this glitch exactly? Well, it isn't about not being smart enough. It's actually a feature that's literally hardwired into our human psychology. It's that emotional roller coaster that causes the average investor to consistently, and I mean consistently, do worse than the market itself. So why do we keep falling for this glitch? Why do we keep making the same mistakes? Well, it's because most of us are stuck in something called the optimizer trap. You know this trap. It's all that conventional advice that tells you to do your own research, time the market, or find the next big thing. It basically frames wealth as this intense game of skill that you, the user, have to constantly play and win. And you can really see the difference here. On one side, you've got the optimizer. They're playing a skill game, right? Which means timing, opinions, a ton of friction, fees, and of course, all that emotional chaos. But then you look at the system. It's a completely different game. It's an efficiency game. The only things that matter are time, compounding, and algorithmic precision, getting the market's return with absolutely zero leakage. And this right here, this is basically the physics of wealth. It's a simple equation. Look closely. Capital times compounding times time. Now, what's missing? Right, your opinion isn't in the equation, your IQ, nope, not a variable, your amazing ability to predict the future, it's not there because it doesn't matter. And that's where this comes in, the no decision protocol. This isn't just another strategy. Think of it as an installable, closed-loop system for your money. Its entire design is built on one simple, powerful directive: zero human intervention. Now let's be super clear about something. This isn't lazy passive investing. No way. This is algorithmic allocation. It's a precision-engineered, automated system. The whole point is to capture the entire global market return by stripping the portfolio down to only its most essential, powerful components. It's about being ruthlessly efficient, not apathetic. So you're probably wondering, okay, how does this thing actually work under the hood? Well, it operates on a beautifully simple, totally elegant core mechanism, and it's called the three-asset kernel. And this is it. This is the entire machine, just three simple components. First up, the total U.S. market. Think of that as your engine. It's capturing all that domestic innovation and growth. Second, the total international market. That's your hedge, giving you global diversification. And finally, you have the total bond market. This is your ballast. Its job is to keep the ship steady, reduce the wild swings, and basically stop you, the user, from panicking. Okay, now this is where the real magic happens. The hidden genius here is the auto-rebalancing mechanism. So when stocks are flying high, what does the system do? It automatically sells a little bit, that's selling high, to buy more of those stable bonds. But when the stock market takes a nosedive, it does the exact opposite. It sells bonds to scoop up more stocks while they're cheap. That's buying low. It forces perfect discipline without you ever having to log in or make a single gut-wrenching decision. So this whole system, it sounds pretty much unbreakable, right? Almost foolproof. Well, there is one critical vulnerability. One single point of failure that can make the entire protocol collapse. Take a look at this chart. This is what's known as the behavioral gap. See that top bar? That's what the market actually returned. And that shorter bar? That's what the average user actually walked away with. So why the huge gap? It's simple. People sell at the bottom and buy at the top. The system closes this gap by removing the user from the equation. And this is the key takeaway right here. The system doesn't win because it's smarter than you. It wins by forfeit. It outperforms the average emotional human just by not making unforced errors. It just shows up and runs the program perfectly every single day. So what could possibly break this thing? Think of these as viruses trying to infect your system. That constant stream of financial news, all those experts predicting the next crash, the breaking news alerts on your phone, your buddy's hot tip, they are all engineered to do one thing: trigger your emotions and make you want to grab the controls. They're designed to make you feel like you have to do something. And that brings us to the final, most important rule of the whole protocol, the ultimate warning. After all of this engineering, all of this precision, the only way this system can possibly fail is if you, the user, step in and manually override it. So what's the bottom line here? It's time to change your job description. You are no longer the trader. You are the architect. Your job is to build the machine, turn it on, and then, and this is the most critical command of all, walk away. That is the protocol. And honestly, it might just be the only cheat code in this game that actually works.